Hello traders, welcome to Some Event FX. So in today's video, we are going to be doing a recap of the trade we took on Volatility 51X Index. Okay, if you're yet to subscribe to our channel, please do well to hit the subscribe button, like our video and share it as well, okay? Alright, so without further ado, let's dive in. Looking at the chart before us, so we see that Volatility 51X Index was on a downtrend, okay? Now this is a 1 hour time frame. So let's go to our 4 hours time frame. Okay, looking at the 4 hours time frame, we see that when price came in here, let's take our tools. All right, so there was this high that was created. After this high was created, there was a break of structure to the downside, and this low was created, and then a retracement. There was a break of structure to the downside, another low was created, and then this high was created, break of structure to the downside. So price was going down. So that was an uptrend. I mean, a downtrend rather. So price has been on a downtrend. Okay, looking at it from the 4 hours time frame, that higher time frame perspective. Okay, so now haven't seen this. Let's go back to 1 hour time frame. Now coming down to our 1 hour time frame, so we actually saw something here. So when price came here, okay, it broke structure to the downside, and this is a supply zone, of course, where price tap in and then it sold off. And then there's also another break of structure here caused by this other zone. Break of structure caused by this other zone. Okay, so when structure was broken, price retraced to that supply zone and it sold massively. Okay, so we saw this. So now we came in and waited. Now before all this happened, there was a break of structure here, first of all, to the upside, caused by this zone. So this is a demand zone. Okay, this is a valid demand zone because it broke structure. Okay, now this is a demand zone. Okay, so this is a demand zone. It's a valid demand zone. It's a strong low because it broke structure to the upside. So it did all this. So now we're expecting price in the future to tap into the zone and then go up. All right, so now that is exactly what happened. So we saw that after this break of structure to the downside, price tapped into the zone and then it sold down. Yeah, it retraced, it broke another structure to the downside, and then price came in and tapped into our zone. Okay, so now the moment price tapped into our zone, okay, that's the 1 hour time frame. So the moment price tapped into our zone, okay, the next thing we did is we did not just start buying. Okay, we waited for our confirmation entry. Very, very important. Okay, we wait for our confirmation entry. Okay, so as a trader, for you to be profitable as a trader, you must have a rule-based system. So that will mean that before you take any trade, there are certain criteria, there are certain things you are going to see the market do before you choose to place a trade. Okay, so in our case, we first of all saw that there was a break of structure to the upside. Now, this is a zone that caused the break of structure. Okay, so there was a break of structure, and then the next thing we saw imbalance here. So this becomes our valid demand zone. Of course, we saw our order block. Now, when this candle was formed, let's zoom in. So after when this candle was formed, okay, this candle took out a previous low here. It took out a previous low. That's liquidity. It took out the previous low. Now this is a confirmation that there's a very high buying pressure here. Okay, so that's the first thing we saw. We saw our order block. Seeing our order block, of course, that order block did not just broke structure. It took out liquidity from the previous low. Okay, that's the first thing. So the next thing we saw our fair value gap. What's fair value gap? So this is our order block, and there's a second candle and then the third candle. So in between this order block and the third candle, we have a void there. This void is what we call our fair value gap. Now fair value gap often acts as liquidity. Okay, it often acts as liquidity, meaning price in the future will need to come and fill in that void, okay, before it goes up. Okay, all right, so now we have seen our order block. We see our fair value gap or inducement or market inefficiency, and then we have seen our break of structure to the upside. So meaning this is a valid demand zone. Which has a valid order block. So waited for price to tap in. So the moment price tap into that zone, so what was the next thing we did? This is a 1 hour time frame. So now if we go down to our 15-minute time frame, okay, let's see what happened. So now price having tapped into, let me take this out so that we'll see things clearly. Let me take this out. Okay, let me take all these out so that everything will be clear. Okay, so let me just leave that. So now price tap into our zone. The moment price tap into that zone, we waited for a break of structure. We waited for a break of structure. Okay, so price tap in, it broke structure to the upside. So it took out this high, this previous high, took out this previous high as well, took out all these highs. So there was a break of structure. So the next thing we did, we waited for price to come and tap into our zone. Okay, for price to tap into our zone. If looking at this thing in the 15-minute time frame, so we see that price actually did not mitigate this zone in the 15-minute time frame. But if we look at it in the 30-minute time frame, okay, let's go to a 30-minute time frame. 30 minutes time frame, 1 hour, okay, rather. Okay, now coming to our 1 hour time frame here. So price tap into our zone, it broke structure to the upside. So now price retrace and tap into that same zone. That this is an order block that caused that break of structure. Okay, so price came in, it tapped into that order block, it tapped into that order block. So the moment price tap into that hour zone, the next thing we did is to go to our lower time frame to look at for our entry criteria. Okay, of course you saw that the same thing that happened here, okay, is the same thing that happened here. There was a break of structure. Now there's also a fair value gap, okay, a fair value gap, and then price tap into that zone. So let's go to a lower time frame. It could be the 15 minutes, 10 minutes, 5 minutes, it could be 3, depending what you see the market do. So let's go to our 15-minute time frame first. Now coming down to our 15-minute time frame, we saw that price came in, it tapped into that zone. There is no clear break of structure here, so nothing is clear. Okay, it's clear, yeah. So price came in, tap into our zone. So in the 15-minute time frame, so what did we see? We saw that there's a break of structure to the upside. These highs were taken out. These highs taken out. So there was a break of structure. So I have that. So there's this break of structure to the upside. Now, where is the zone that caused the break of structure? Where is the order block? So this order block actually caused a break of structure, you see? Yeah, we have this here. Okay, so having seen our break of structure to the upside, we waited for price to come back to our zone. So after the break of structure, price retrace, it tapped into our zone, and then it bought. So this would have been our entry. Stop loss are below, and then our target would have been, first take profit would have been, let's go to a 1 hour time frame. So where would have been our first exit point? Would have been targeting the previous swing high, which is this. So price came in, tapping, okay, and then of course you saw what price did. It went up, 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 up. So this would have been our first take profit, and then probably this next zone, supply zone, would have been our second take profit, or the next swing high. Okay, this is where we would have actually exited the trade ultimately. All right, so now that's how we would have gotten this perfect entry. That's how we would have gotten this perfect entry. So you see how clear this was. Okay, so for you to be profitable as a trader, you must have a rule-based system. There are some things you need to see the market do before you decide to place a trade or not. So before you hit that buy button, before you hit that sell button, you must have your criteria, you must have your rules. If I can't find this, no trading. So as a trader, you should be able to explain your trade to somebody else. So that last trade you took, let me ask you a question. That last trade you took, can you boldly explain to somebody the reason why you took the trade you took? Or did you just place that trade out of emotion? So as a trader, you must be intentional before you hit the buy or sell button. Okay, so that's very, very key. That is very, very essential. So we've seen that the things we looked at for number one We waited for we saw a break of structure. After the break of structure, we saw the order block that caused the break of structure. After the order block, the next thing we waited for, we saw that there was inefficiency. Okay, we saw an inefficiency. After that, we waited for price to tap into our zone. After price tap into our zone, we waited for a break of structure and then a retracement. That's when we go to our lower time frame to look at for our entry model. Very, very important. So, all right, guys, till we meet in our next video. Bye for now.